Hey traders, Jason here from Leavitt Brothers. So in this video I want to talk about how weekly bar charts tend to smooth everything out. Okay, we have access to intraday charts, lots of indicators, and when you look at shorter term charts, they look chaotic, they look random, lots of higher high, lower low gaps, random intraday moves. It's kind of stressful just to look at some of those charts. And then so the purpose here is to back up, look at some weekly bar charts and show you how when you do that, look at the weekly bar charts, everything kind of smooths out. It's almost like the world becomes more peaceful and the charts become more tradable. I think it's a lost art. If you talk to people, older people like in their 60s who have been trading for a while, they'll talk all day about weekly charts, and then the younger generation doesn't even look at them. So this is like a little subtle reminder, like, hey, back up, look at the weekly bar charts. You'd be amazed at how they smooth everything out, and it's a lot easier. Even if you're a day trader, it's a lot easier to day trade a stock that looks good on the weekly chart than it is to just day trade a random stock that's just moving randomly around. All right, before I start, just a quick reminder, Leavitt Brothers currently has our open access period. You could sign up, check out our analysis, check out our trading ideas. Here's a link. There's a link below the video here, so you don't have to write this down. No credit card needed. You don't need anything. Just all you got to do is just register. It's just your name and email address and such. So come check us out, see what we're trading, see how we're attacking this market. All right, let's get into it. So first example, and again, I'm just going to go through a bunch of examples here. So here's TGTX. You can see here, weak stock trending down on the left side of the chart, popped off a low. Okay, and you can see like pretty good, steady volume over here, increases there, then a big increase there. Then it spent a couple months just drifting down in like a falling wedge pattern. Then it broke out in a big way with huge volume here. Then it just kind of trades sideways, getting support from the 21 EMA, resistance up here. Look how smooth this is. Look how there's a total lack of stress here. Okay, if you look at the daily chart, this range here is like 9.5 down to like the low sevens, 7.3, 7.4. So that's a fairly big range. That's 25-30% range depending on where you are in the range. So on a daily chart, this could look kind of chaotic, kind of I'm sure there's some gaps in there, just a little bit messy. You look at the weekly chart here, it looks smooth, it looks graceful, it looks, you could very easily draw trend lines that contain the price action. You could see the weekly volume bars, which the weekly data is more important than the daily data. Okay, so let me look at the next. Now let's see what happened afterwards. This is what happened afterwards. So the period that I just highlighted, was here where it was getting support from the 21 or resistance overhead, and you can see how it moved up. Okay, it moved up above resistance. There was huge amount of volume there, traded sideways for like 2 to 3 weeks, moved sideways, broke out, moved sideways again for another 2 to 3 weeks, broke out, came back down, tested, formed a support level here at 14, which was the resistance level over here. Okay, and then it moved up from there. Now, not all stocks are going to go from $10 up into the 30s. This is just an example of what you have here is a gently rolling bottom pattern, moves up to takes out that high, then consolidates. Okay, huge volume here, consolidates, and then moves up, rides its 8 moving average up, comes back down, gets support from its 21, and then rides its 8 moving average up. Okay, on the daily chart, this would be hard to read, but on a weekly chart, doesn't it look nice and smooth? Okay, just looking at it makes my pulse drop. All right, next example, DraftKings. Stock popped over here in early August, followed through, and then just traded down for several months. Okay, then as you can see here, it breaks out. So like this is a nice move, but because it's happening like this move down followed by this base is not long enough, or it doesn't last long enough to really support an extended move up, because all the moving averages are pointing down with pretty steep slope. The 50 is like way up here. So it took several more months to allow the 50 to fall far enough that when we got to move off the low, a little bit of increase in volume here, we got above the 21. right over here, the 8 gets above the 21, which is the first time since it got above here and then lost it. And you can see that the 8 is below the 21 this entire time. So this is basically the first time it's been able to get above the 20. The 8's above the 21. Now we're consolidating over here above the 50, which is starting to flatten out. So everything is looking good. Okay, on a daily chart, this is a mess. This is a total mess because the range here is like 20 all the way down to 10, 11 bucks. Okay, so that's a huge range. If you were to, let me delete those. If you were to look at the daily chart, like here, the entire chart, the price action would fill up the entire chart like this, and the stock would be over here. You wouldn't really be able to read it. But when you look at the weekly chart, it looks very orderly that this thing just falls. We got a bottom over here, then it rallies up, and now it's consolidating above some key moving averages, as you can see, and it looks like a trend change is underway. So if I go to the next chart, we get this. Okay, you get some follow through here, which is good. It matches the high there, matches the high there, that high there. So we're going to get so we have a round bottom here, round bottom here. We do some backing and filling here. Volume drops off over here. We get a resistance level up here, like so, and then we get a breakout and a continuation up. Okay, so on the daily chart, it's kind of a mess, a lot of gaps, a lot of random moves. On the weekly chart, it tends to smooth it out, and you look for a volume breakout like that, which definitively gets the ball rolling. Again, the weekly chart smooths everything out. They're a lot easier to read, so you should check them out. Here's another one, EQX Gold stock. So notice how the stock trends down below the 8, below the 8, below the 8. There's one move up there above the 8. But it's below the 8. Now, as we get over here into the base, the stock starts to firm. Okay, so now instead of the 8 being resistance, now we have the 21 as resistance. Breaks out of that little base here with resistance level 375 to 4. Gets rejected by the 50. Comes back down. Does a little bit more basing below the 8, and then we get a breakout here. You can see huge volume breakout, gets above all key moving averages, and it looks like maybe this is the the beginning of a trend change. We don't know for sure, okay, but it certainly has potential. There's a big volume day there, but it couldn't even get above the 21-day moving average. We have some decent volume here, but it eventually got rejected by the 50-day moving average. So we got a big bottom here, a smaller bottom here. It looks like we maybe have a trend change going on. If I continue on, you can see what happened. The stock followed through for several weeks and is now moving sideways, as you can see. So not a bad setup here. Big rounded bottom here, smaller bottom here, rallies up, huge volume, and now consolidating up here. So this is a great one. It looks like we got some open space here that definitely can get filled. Okay, weekly chart looks really smooth. This over here on a daily chart is a sloppy mess, but on a weekly chart, it's fairly calm, it's fairly peaceful. It's a lot less stressful to look at these charts and find trades. Okay, next one, Mara, Bitcoin stock. So stock moved huge. Right here, stock moved huge off of a low. In 1 week, it went from $4 to $8, so stock nearly doubled in a week. Volume was huge. Then it settled in here for a couple months. We have resistance level just above. We have the 50 just above. We have the 8 and the 21 just below. So this is really great action where it moves up, comes back down, consolidates for a couple months. But these last 3 weeks over here are really fantastic because what you're getting is you're getting a volatility contraction here just above resistance or just below resistance, just below the 50, just above the 21. Volume is falling off, so the stock is just quieting down. So this is a great stock to play as a breakout, and then we see what happens. Okay, next, and you can see what's happened over the last 5 weeks. The stock did break out. You got big volume here, big move, then it settled down, and now it's just kind of settling into a smaller range. Okay, so trade might not be over. I think of this as a trend change in place, that it broke out here and now it's finding support close to that previous resistance level, right on top of the 21 EMA. Volume It's kind of hard to see if volume is declining because I'm recording this on a Tuesday, so we don't know what this eventual volume bar will be. But it looks like, again, we have a couple smaller candles here as the stock calms down. Looks like this is going to be a decent play to the upside. Okay, on a daily chart, this is a mess. On a weekly chart, it's pretty calm and peaceful and orderly, and it gives you the feeling that it's easier to trade. Here's on cloud. So stock was mostly weak on for the left side, middle of the chart. Stock, bottoms, double bottoms over here, breaks out. We get a lot of volume over here as the stock moves up, and then the stock settles into like a falling pattern here. Everything looks good here. Okay, weak stock over here, but it pops off a low, huge volume for several weeks in a row, then slowly starts to trade against the newly forming uptrend. And you can see how it got rejected there. 50 is supporting it. The 21 is supporting it. Everything looks good here. This is definitely a stock you'd want to key on. Now, again, on a weekly chart, now this is the weekly chart. If I were to look at this chart, if I were to look at, say, like the 6 or 8 month chart like this, it would be a mess. And this little flag pattern here would be forming up here in the upper right hand corner. And sometimes it's not supposed to be like this, but sometimes when a chart is consolidating in the upper right corner, it's hard to visualize where it might go because it looks like the chart itself, where your computer monitor acts as some sort of a boundary. But you look at the weekly chart and it's fairly calm and peaceful, and it gives you the impression that it can go much higher. This is what eventually happened. Now this stock actually had earnings and it gapped up here to 26. If you're not comfortable playing a gap up, that's fine. This still serves as an example of what a good setup looks like, to have like a rolling double bottom pattern, move to a higher high, then drift lower, and then break out from there after finding support at a key moving average. That's a perfect sequence that you want to look for. Here's Riot. Another Bitcoin stock was weak. You can see, got rejected by the 21, Rallies huge here, several weeks in a row. And then as you can see what it's doing, it's like settling in here. We have a resistance level at the 50-day moving average. We have resistance up here at 7 from like just all the price bars. We have some support here at $5 on a daily chart. This looks kind of chaotic and messy because when you get a 2-point range with a $5, $6, $7 stock, that's huge percentage wise. But on this weekly chart, it actually looks fairly orderly. For a stock to bottom, move off the low on huge volume, move sideways for a couple months, that looks like a great trade to eventually play to the upside. This is what happened. So Riot did in fact break out here. Volume was huge. It moved up. It consolidated here underneath $10 for 3 or 4 weeks, and it broke out again. And as you can see what's happening now, it broke out, came back down, and now we have this little consolidation pattern here. Volume starting to fall off. We'll have to see what it is the rest of the week. But this looks really good. We have the 8 above the 21. The 50 is starting to curl up here. Everything looks good for a trend change to be in place. Okay, just a couple others really quickly. Here's AGI. Okay, breakout here, from a base, and you can see moved up along its 8, came down, tested its 21, and then trended up above its 8. Okay, calm, peaceful, a complete lack of stress when you look at the weekly bar charts versus looking at the daily charts. Another example, GE. Love this sequence. Double bottom, moves to a higher high above the hump there, settles back down, finds support at a key moving average, and then trends up above its 8 moving average. So great sequence here. You want to trade that every time. Anytime you get like a nice rolling double bottom and then a consolidation pattern at a slightly higher high, you want to play a breakout from there, or an innocent dip back to a key level is also playable. Okay. On a daily chart, this might not look as attractive, but on a weekly chart, which by definition eliminates the gaps, eliminates the intraday chaos, the weekly charts look really smooth. One more chart, HIMS. So this stock moved up here, looked like a trend change, but they came all the way back down. So even if you were playing a bounce in here, you got stopped out for a quick loss. Stock came down here and based. This is probably earnings. I haven't looked, but you get a huge volume move, huge price move from like low $4 up to like $6. So the stock went up like 50% in 1 week. Then we got a consolidation pattern. Stock breaks out, comes down, tests the 21, moves up, consolidation pattern above 8, just below 8, breaks out from there, and you can see things get chaotic over there, and certainly would not be holding a stock that drops from 12 down, down below 8.5. But anyways, the sequence here is like pretty smooth. For it to like break out here on strong volume, consolidate, move up, test a previous high, that high and that high are about the same, come down, test a moving average, and then move up from there. That's calm, that's peaceful. That's a lot less stressful to trade than your typical daily chart. All right, that's all I got for you. Hopefully this helps. We have a tendency to zoom in way too close, and just looking at the charts is stressful. And then when you back up and you look at the weekly bar charts, everything kind of smooths out, and you can kind of see what the bigger picture is. Even if you're a day trader, sometimes it's better to day trade in a stock that's trending up on the weekly time frame versus just randomly day trading a stock. All right, hope this helps. Check out Leavitt Brothers Open Access, and I'll see you next time.